Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. I hope you're having a very good day wherever you are. Lots happening in the world, but really it's mostly resting around things like Japan's GDP, which came out with a nice on-year result, but really what mattered was the quarterly result for the GDP there, which was up 0.9%, which means the Japanese economy grew a full 1.0% in the first half of the year. If you wanted to annualize that, it's growing at about 2%. I think that's probably a more accurate reflection of where the Japanese economy is at the moment. And of course, we've had inflation really pushing up and firming 2.2 towards 2.5%. And the way it's holding up there, it does look like inflation in Japan is going to go a little bit higher. And this could begin to prompt the Bank of Japan to finally start thinking about raising interest rates at some point. I don't expect them, I thought it was nonsense to be talking about this a month ago. But now that we've had this better GDP number, a little bit more stability in the Japanese economy overall, there is now I feel anyway, it is reasonable to begin to talk about the possibility that the BOJ will raise interest rates in 2-3 meetings time, not initially. But given how short the currency speculative market is against the yen at the moment, any real sort of ignition, if you like, for the idea that the BOJ could be headed towards rate hikes could be enough to cause some short sellers to buy back. And it may also be about now, given that the Japanese yen has fallen over 25% since this whole process started earlier this year, that's a whopping revaluation to the downside that any exporter in any country would love to see. And Japan Inc. is a thing. And Japan Inc. wanted this revaluation desperately for the economy. And that's why previously I advised people there was no way the Bank of Japan was going to raise interest rates. Whole lot of investment banks, Wall Streeters came out and said, oh yes, the BOJ is going to have to be like us and raise interest rates. Well, no, not everyone has to be like the US and way behind the curve. But in Japan, they wanted a lower yen. And they have it. And they wanted low interest rates for a long time. And they've certainly had that. So now Japan Inc. could begin to, if you like, rise up again. And one of the first things it might do, particularly their exporters, of course, is hedge forward their currency receipts for 1, 2, even 3 years. Why not lock in this 25% windfall? And it's more than 25% on profits. It's massive, a massive boost to profits. It's like your profit margin just increased from, 20-30% to 50-55%. So it's a massive profitability sort of explosion for Japan Inc. They will want to lock that in, not let that slip away. So just as everyone's starting to think, oh, the yen can't stop, it's going to fall forever, it's going to 150, who knows, it might be, I would begin to suggest to watch for price action clues that suggest the yen could be bottoming. Against the euro, it's very problematic. It's up here again trying to break to a new high in the euro yen, a very important medium to long-term high point. And it's hard, though, for the yen to rally against the euro when people are only just beginning to price in the idea that the ECB will be hiking by 75 points. Because most certainly the Bank of Japan won't be hiking by 75 points. They'll probably do 25 or 50 points, maybe even only 10 or 15 points, as is the Japanese way to be gentle at first, to pre-warn people that rates really are going to be going up. So against the euro, maybe not such a good trade, and only a trade to buy yen possibly against the US dollar because of the tremendous short positioning that's already in place there. So Japan finally coming out of the doldrums and could, on a medium to long-term basis now, begin to look a lot better economically. And the inflation there is probably not going to be run away the way it has been in Europe and the United States and the UK, but it will nevertheless probably be ticking up towards 3.5% over the next year. That's still too high for Bank of Japan comfort. That's why the internal discussion post today's GDP numbers, the internal discussion at the Bank of Japan is probably begun now, which it hadn't really done so before. So look for some statements, some conversation that starts to lean that way. Keep a close eye on the price action for the yen breaking up against the US dollar yen breaking down, and that could be quite a good move. I mean, the yen has fallen, the dollar yen has risen 25%. A 5 to 10% move to the downside in dollar yen would almost be just a standard correction. I probably think it's only 3 to 5%, maybe 6%, but even so, in the world of foreign exchange trading, that's a pretty exciting prospect. Anyway, just something to keep an eye on because the whole world seems to think the yen will keep falling forever. That's not so. Japan Inc. will want to take advantage and lock in this fabulous gift horse, which, to be fair, they've probably engineered. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities.